Hey guys, Taylor here. Thanks for stopping in. I just noticed a few things in the covered call market I wanted to cover today. If you've paid attention to the market at all the past few months, you'll know since about the end of March we have been on an absolute face-ripping rally, which made me want to consider looking and seeing how the covered call ETFs have done. And what I found was kind of surprising, and it was a little bit disappointing for everybody's fan favorite QQQI compared to some of the other kids on the block. So if that interests you, be sure to hit that subscribe button and let's jump into it. So looking at the chart here on Seeking Alpha from the lows on about March 30th, I've added in the Qs here just so we can kind of get a baseline. QQQ was up 24.25% as of the time of recording. Looking at TDAX, the Tapp Alpha Enhanced or Leverage Fund, actually beat the Qs. It's up 29.17%. It's a very new fund, but I'm actually very pleased with that number. It's a little different from the other covered call funds in that it uses zero data expiry options versus some of the longer dated call options that the other funds use. And that seems to have partially played into their benefit along with that leverage. The one I was kind of disappointed in was QQQI, which was only able to capture 15.28% of that upside, so lagging the broader Qs by about 9%. Now over time that may get closer. If you look at the historic chart, it's very rare that QQQI lags this much. I think it was just that this rally was just so violent to the up that they were not able to effectively write their calls and capture all that upside as well as some of the other funds. GPIQ from Goldman Sachs did a little bit better at 19.77. Looking at the leveraged fund from NEOS XQQI, almost performed on par with the Qs. Very pleased with that result. Not as good as the Tapp Alpha leveraged fund, but they seem to hold their own a little better than the non-leveraged funds, at least over this time frame. Zooming out and going back to February 3rd, we can see again on that longer dated time frame, TDAX is still outpacing the Qs with total return of 18.28 versus the Qs 16.46. Again, QQQI is lagging at 9.21%. GPIQ kind of right in the middle at 13.86. And then the leveraged NEOS fund XQQQI coming in at a respectable 12.65%. Now if we remove the newer funds, the XQQQI and the TDAX, I'm going to add in TDAC, which is the non-leveraged Tapp Alpha fund. And I'm going to go back. So going back to inception of TDAC on September 4th, 2025, looking at the Q's total return at 25%. QQQI only returned 16.69%, whereas GPIC's total return was 23.15%, and TDAC was actually the winner here at 24.14%. I know that TDAC and TDAX respectively are newer funds, but they've been performing really, really well. And at least over the past 6 months, I've kind of been a little disappointed in QQQI. So if we go all the way back to January 30th, 2024, we see that the Qs have returned 70.69%. Then QQQI way down at 56.09%, and GPIC at 64.24%. None of the other funds are this old. We could certainly look at GPI or XYLD or QYLD, one of the older covered call formulas, but I do feel that in terms of the newer covered call funds where they do not write on the entire notional, these give us the best idea of how these funds will perform in the long term. And as we can see right here, all three of them were almost parallel up until March 30th. We kind of have that dip and then this amazing rally that the market has had where the Qs definitely pulled away. GPIC tried to keep up, and QQQI lagged quite a bit. If we look at the date on the 30th, much more in line. The Qs had returned 32.88%. QQQI was right on pace at 31.59%, and GPIC was, actually outperforming very briefly at 33.11%. So in the long term, there does seem to be somewhat of a lag, though fairly consistent. I do think Tapp Alpha has a great chart here on their website where it kind of shows the market dynamics of the covered call funds and how they should perform in each market. This is certainly a variable based on how each company is writing the covered calls, how far out of the money. But if we are in a bear market, they should slightly outperform because we are gaining those premiums. If the market is just stone cold flat, we should outperform there. If we're in a moderate bull market where we're able to obtain our covered calls and not have the bull market go outside of the money and have our shares called away, we should outperform there. But if we are having a face ripper bull rally like we've had the past few months, we have noticed that underperformance in all of the funds that do not have leverage. So I am curious to see over the next few months to year how QQQI recovers, if we can get a flat market versus how GPIQ does. GPIQ has been doing absolute gangbusters since inception. I'm very pleased with that. As always, when we buy these covered call funds, we know that we are not going to keep up with the underlying, but these funds have done fairly close and distributing that great return of capital that we all love so much. Certainly, if you do not need the income, certainly just hold the Qs, hold the Vanguard Technology Fund, hold the S&P 500. These funds are for people that want that return of capital income and have a use for it. You're better off holding the notional. Now, the leverage funds, TDAX has been doing very well. I'm curious to see if it can continue to outperform. If we do have consistent funds in the United States that outperform like some of the Canadian counterparts have proven is possible, I do think that will be a game changer for not just early retirees, but people looking to make these a staple in their passive income portfolios. So I think the moral of the story here is that there is a human element to the covered call funds. Over the long term, I do think these will perform fairly similar. I am impressed by GPIQ as well as TDAX and TDAC over the past 6 months. I do like that QQQI and GPIQ pay on different weeks of the month, so if you are looking for bi-weekly pay or to even stagger more funds to try to get paid weekly, I think that's reasonable. I'm not selling any of my QQQI yet. I'm going to see how these funds do over the next several weeks. If you guys have noticed anything else odd about the market, be sure to let me know. But this is showing that in a strong bull market, you are going to lose to the upside with these covered calls. They are going to get called away. To what degree that happens, maybe up to how the fund writes the covered calls. The 0 DTE from Tapp Alpha seems to be doing great. I previously owned the Round Hills, the 0 DTE funds, and in terms of a total return basis, they did very well, although I did not like the NAV erosion. So if Tapp Alpha can keep the NAV stable, I think a lot of people will flock to these funds and the assets under management may increase significantly over the following year. Hit that subscribe button and I'll see you in the next one, guys.